Welcome to The Explainer. Today, we're going to dive into this really incredible study that totally flipped a classic investment debate on its head. It reveals how two strategies that seem like polar opposites might actually be, well, two sides of the same, incredibly powerful coin.
So let's kick things off with a puzzle that has honestly fascinated investors for decades. It's a real showdown between two completely different philosophies of how to make money.
All right, so on one side, you've got value investing. Think of this as the classic bargain hunter, right? You're buying stuff that's unpopular, that's cheap. Then on the other side, you have momentum. This is the trend follower, buying what's already hot, what's rising in price. And for the longest time, everyone saw these as two totally separate, even competing ideas. You were either a value guy or a momentum guy.
But then, a team of researchers came along and said, hey, what if we stop looking at these in isolation? They decided to investigate these two forces together, and not just in a small way, but on a massive global scale.
And when I say massive, I mean it. They didn't just stick to US stocks, which is what a lot of studies do. No, they looked, and I'm quoting here, everywhere. We're talking about a huge net cast across 8 completely different markets and asset classes. Everything from US, UK, European, and Japanese stocks, all the way to things you might not even think of, like government bonds, currencies, and even commodity futures.
And you know, it was this incredibly broad approach, this decision to look across 8 totally different arenas, that turned out to be the key. It was what allowed them to unlock a really fundamental secret about how markets actually work.
All right, so let's get into the results. When the researchers started crunching all of this global data, the very first thing they found, well, it was pretty stunning.
They found that both strategies, the bargain hunting value approach and the trend following momentum approach, they both showed positive returns pretty much everywhere they looked. It was consistent. It was ubiquitous. It didn't matter if they were looking at Japanese stocks or government bonds. Both ideas just worked.
So, okay, that's the first big takeaway. Both of these strategies work on their own. You could build a totally solid investment plan around just one of them. But honestly, that's not the real story here. Not even close.
Because the thing that really turns conventional wisdom on its head isn't just that they both work, it's how they work in relation to each other. This is where it gets really interesting.
What they found was that these two strategies are strongly negatively correlated. Think of it like a seesaw, right? When value is up but having a great year, momentum is often down and struggling. And when momentum is soaring, well, you guessed it, value is probably in a slump. They consistently move in opposite directions.
Now, this negative correlation, that was a massive clue. It was a huge flashing sign suggesting that there had to be some kind of hidden global force pulling the strings, influencing both of these strategies at the same time, all across the world.
And here's why they thought that. The study found that all the different value strategies, no matter what asset we're talking about, they tended to move together. And same for momentum. All the momentum strategies move together too. This idea is called co-movement, and it's kind of like finding the exact same fingerprint at 8 different crime scenes. It points to one common culprit. So, what is this hidden force? Well, the researchers had a prime suspect for this global factor, and it's something called funding liquidity risk. This really breaks down the dynamic beautifully. Let's think of momentum as the really popular, super crowded party. It's the place to be. But what happens when a fire alarm goes off? Say, a liquidity crunch hits the market. Everyone panics and rushes for the one tiny exit at the same time. It's chaos. But the value strategy, that's like being in a nearly empty room. When the alarm sounds, you just calmly walk out. It's way less crowded, and that makes it much less vulnerable to that kind of panic selling. Okay, so this brings us to the final, and maybe most important piece of the puzzle. This is where it all comes together in the paper's incredible conclusion. If these two powerful forces are always working in opposition, the big question is, what happens when you put them on the same team? And here it is, the big reveal. Just look at these numbers. The risk-adjusted return, what we call the Sharpe ratio, for value all by itself is 0.72. For momentum, it's pretty similar, 0.74. But, and this is the amazing part, when you just simply combine them, a 50-50 split, that number explodes to 1.59. The performance literally more than doubles just by pairing them up.
So why is this such a big deal? Because what you're seeing is something that transforms a portfolio. You take two good but volatile ideas, and you create something far more powerful and far more stable than either one could ever be on its own. And this isn't just some interesting little market trick. It actually presents a massive new challenge. a hurdle that a lot of existing financial models now have to try and explain.
The whole magic here, the crucial point, is that their opposing natures completely smooth out the ride. That negative correlation we talked about, it basically acts like a natural shock absorber for your portfolio. It just dampens all those big stomach-churning swings that each strategy would have on its own. So really, the key takeaway is this. By taking that broad view, by looking everywhere, the researchers uncovered a truly fundamental relationship in markets. And it's one that a lot of existing financial theories, well, they just can't ignore it. The bar for what we thought we understood about how markets work has just been raised. A lot. And that leaves us with a pretty fascinating final thought, doesn't it? This study cracked a huge code just by looking at old ideas in a completely new, global way. It really makes you wonder, what other powerful market rules like this are just hiding there in plain sight, waiting for someone to ask the right questions?